Hello, in this video, I will review the signals provided by Sunshine AI Signals and how it can be used to trade ES500 or MES 500 future contracts. You can also trade using options or ETFs, such as SPY with the various leveraged ETFs for the S&P 500. For those of you who have not viewed the introduction video, I strongly encourage you to do so. You can find the intro video as well as our other videos on our YouTube channel. As a brief review, you may recall that Sunshine Signals provides 3 signals daily: the main signal, the short-term signal, the weekly signal, and sometimes the monthly signal is also given. Also, each day, a pivot point, a resistance, and support levels will be provided. The pivot point will act as the bull-bear line for the day. Sometimes an EOD sequence will be provided, but not always. And if the signal detects a trending day possibility, it will show as unilateral. Here, it's showing as not a trending day possibility. Also, pre-market, a reference chart will be given. The reference chart is not to be used as the exact movement of the day, but simply a reference. And it should be used in conjunction with the other information provided. In the following slides, we will take a look at how all of this can work together to help find higher probability trades in a trading day. Before we review this week's market activities, it is helpful to zoom out and take a look at the larger trend. This is the ES daily chart starting from the beginning of 2024. As we can see, the market has been in an uptrend since the beginning of the year. From mid-March to mid-April, the market fluctuated between 5160 to 5300 before breaking down under that range in mid-April. Prices subsequently broke under the 50 to 5060 support area, but did find support in the 4950 to 60 zone. Then prices rotated back up and recaptured this range in May. And once that happened, prices moved back up to the top of this range. On June 7th, the market closed on a weekly basis above this range. Hence, for this week, we wanted to see if the market can hold this 5320 area. And if it does, then we're anticipating further upward movement. If not, then we could see another retest in the middle of the zone. We also anticipated that the market may chop between 5330 to 5380 on Monday and Tuesday in anticipation of the CPI release on Wednesday, June 12th, and PPI release on Thursday, June 13th. For June 10th, recall that the market ended with a range buy signal on Friday, June 7th, and a monthly buy signal. For June 10th, Monday, June 10th, the reference chart suggesting possible chop day. Pre-market signal is showing a triple range under a monthly buy. So the range is a slight downgrade from Friday. Market opened at around the 5344 pivot point, but couldn't get under. So although we had a slight downgrade, the fact that it's remaining above the pivot point provides a buying the dip bias for the day. It's possible that a long would not have been taken at the beginning of the day since we're observing the market. Here, the next long opportunity probably would have came around here when we had this slight dip here. And you could have gone long around this area with a stop below the low of day. And if this long had been taken, it would have given about 20 points. For Tuesday, June 11th, the reference chart is showing another possible chop day. Again, we had anticipated the range to be 5330 to 5380 prior to CPI the next day. Pre-market, the signal gave a range buy, a slight upgrade from the day before. Market opened around the 53.52 pivot, and this time the market broke under it. It did not hit the 53.20 support, but it did go to, the signal did provide another support at 52.34, and that is also close to our range of 53.30. So long could have been taken here with a stop either below 52.30 or a stop below this next support, and you could have maybe added at this support if it went down, just depending on what your risk level is. So, and this trade, if taken, would have initially given about 20 to 25 points. And if you had held a runner for the end of the day, it would have given up to 50 points. For Wednesday, June 12th, CPI was released at 8:30. Prior to release, the signal gave two reference charts as possible movements. This suggests that if the prices drop, we could see a recovery, or the prices go up, we could see a retrace. Again, however, I don't rely on reference chart on event days. Rather, it is better to see the price action. Post-release, the signal provided this updated reference chart. And also pre-release, the signal provided two support levels here and two resistance levels here. CPI came out lower than expected, and we saw an immediate bounce from the market, right up to around our first resistance level at 54.20. And upon open, the market didn't really retrace at all and just continued going up. And at 10:30 here, that we initially had a long at EOD sequence that was dissolved. And what that tells us is that it's possible that the market will not dip to provide a long opportunity. Or if the market does dip, that we should not try to go long. We should just let it drop and see what the prices does. So the market pretty much either chopped and then went up towards the end of the day. And then at the end of the day, we have a short EOD sequence. And this was probably, if you had not gone long here, this was probably the first possible opportunity is when the prices reached close to our next resistance at 54.54. You could have taken a short here, and that would have provided about 30 points here. And also at close, because PPI was due to come out the next day, it's probably best to exit all your positions at close and wait for the next opportunity. So on Thursday, June 13th, TradingView switched over to the September contracts, which is why you see a difference in price. So the difference is about 65 points between the two contracts. Sunshine Signal, however, is still providing ESM, or the June contracts. Again, so the difference between the two is 65 points. Pre-release and post-release reference charts are posted here, and both charts suggest a possible upward movement. Pre-release, the signal provided a resistance. I'm sorry, this is supposed to say support, and a support level here. Upon release, PPI came out lower than expected, and upon release, it went up. But since we already had significant upward movement from the day before, the movement up was only about 15 points or so. And it did not hit the resistance here at 55.27, but our 54.54 resistance from before, now under this new contract, is at 54.20. So it did come close to there. So that could have been a short opportunity. And at open, the prices could not move up over the high here. So that could have been another short opportunity. and to take. And when it broke under the 53.92 pivot point, that could have been another short opportunity when it kind of bounced around here a little bit. The bounce here could be another short opportunity. And if it taken, this trade would have given anywhere between 10 to 20 points. And this 54.80 level would have been, since that's what we were observing, this is where the prices bounce. And here, when it tried to break under it and then fail, that was a sign to exit your shorts. And you could have taken a long if you wanted to with a stop below this point, because for further downward movement, we will want to see this level break. So when this, when it held, and if a long taken, it would have provided another 20 points. For Friday, June 14th, the reference chart is showing possible downward movement in the beginning of the trading day, and then perhaps chops for the rest of the day. The signal is range buy with a pivot point at 54.70, which you recall if you recall the low of the prior day was 54.75, so that would be the level to watch. And at open, the prices chopped a little bit, but could not really break under the low from the prior day. So this could have been a long opportunity with a stop, below that. And if that had been taken, it would have given you between 20 to 25 points. Zooming out again, we see that this week prices continued its upward trend after closing above this zone last week. So for next week, we will again see if 54.75 ESU, the September contract, can continue to hold. If it does, then further upward movement is expected. For downside, we first want to see 54.75 break, and then 54.50, which was the breakout point from CPI. If that happens, we could see a test at the top of this zone which is at 53.80 on the ESU contract. If you have any questions or would like more information about Sunshine AI Signals, feel free to contact us at this email address.